ladies and gentlemen. I understand that we have 10 minutes for the presentation, so I'll try to keep it within the 10-minute time limit. I've always been accused of talking too fast, so hopefully you'll be able to keep up with me. Copper Fox is basically involved in developing, completing a feasibility study on a very large porphyry copper deposit, northwest British Columbia, geopolitically stable area. As you can expect, you see an awful lot of news around the world these days where foreign jurisdictions are taking larger and larger portions of resources. That, I think, is going to fundamentally affect the overall supply-demand equation, which, as Lauren said, which I agree with, is looking good for the future. Two things that are very important about our project. We're only 278 kilometers from tidewater, and 2 weeks ago, the BC Hydro has announced construction of a high-voltage power line up into that part of the world, which is fundamental to developing any project the size of Schaft Creek. That's our forward-looking statement. Please pay particular attention to it. As QP, I'm responsible for the presentation and do take responsibility for it. These are the management directors of the corporation. I won't dwell on that. I'm President, CEO, Chairman of the Board. I have my Executive Vice President, Mike Smith, with me here today. The Board of Directors and management do own about 58% of the stock. A little bit on the market capitalization of the company. History over the last 12 months. Shares outstanding approximately 400 million. Fully diluted, 386 million total. Market cap, that changes on a daily basis. Down today, we got hit today in the market as well as I think just about everybody else. Share price range. At this time when we prepared this presentation 3 to 4 days ago, it was about $1.65. Now it's down to about $1.22. I believe we closed there today. 52-week range, 53 cents to $2.75. Preliminary feasibility study was done on the project in 2008. It is 3 years old. I caution you it's historical, but it does show some very significant facts about the project. First and foremost, it is producing 4 metals: copper, gold, silver, and molybdenum. It's primarily a copper deposit, but it also has very significant concentrations of molybdenum, gold, and silver as a byproduct credits, and it's those credits that's actually driving the economics of the project. The preliminary feasibility study had a capital investment of $3.7 billion, initial capital $2.4 billion, $500 million on contingencies, and $800 million in sustaining capital, 24-year mine life, 100,000 tons a day. At the end of it, discounted over the 24-year mine life, 8% discount. Project had a value of $2.76 billion. After-tax value, $1.6 billion. Cost to produce a pound of copper net of other metal credits, minus 32 cents, underscoring the fundamental necessity to have more than one metal coming out of these large projects, and it's very fundamental to provide good economics. So what are we going to do? Obviously, we want to improve on the feasibility study, which we expect to deliver in the fourth quarter this year. First and foremost, we want to start with a 3-year high-grade starter pit. Why? Because we want to pay out the capital investment as quickly as we possibly can. We want to increase the daily mill capacity because 100,000 tons a day does not optimize the resource or the reserve that was done back in 2008. So we're looking at starting at 120,000 tons a day, gradually moving up to 180,000 tons a day. We're trying to reduce our capital costs or keeping them in the range where they were in 2008. We think we're going to be able to do that, and then obviously get the payback period down as quickly as we possibly can. The picture here shows you the general layout of the project. It's in a very good location, lots of space for mine development and infrastructure. This is probably the most fundamental thing that I think we've done at Schaft Creek in about 2 years. Last year, we found a new zone of higher grade mineralization, which for 50 years, Schaft Creek, I think in the industry, was known as a large low-grade porphyry deposit. Well, these results clearly indicate there are zones of larger mineralization, and in general, what this slide is telling you, as you go deeper, the grades increase. This is something else we've recognized as well. In the top left-hand corner, you can see in orange the land that's now held by Copper Fox. You can see what we call in Schaft Creek in mineral trend. In the larger slide, Schaft Creek is a deposit, and I'll talk about the resources there later. The Mike zone is a big chargeability anomaly, no drilling in it. ES zone, large zone, 1,200 meters long, gold, silver, moly, and copper on surface. The GK zone, 1,700 meters long, same thing, and no diamond drill holes in either one of them. We actually now think, based on all the parameters so far, we're actually in an emerging porphyry copper district, not just a deposit. This is the geophysical target we had at Schaft Creek. You can see where we were drilling in 2010, and from there you can see where we're drilling in 2011. From the top of the orange anomaly to the bottom of it is about 1,000 meters vertical extent. You can see there's one where we're drilling there, and down to the south part of the deposit where there is no drilling. We think we have another porphyry source, and then the Mike anomaly you can see to the north. So clearly there's a lot of potential. This shows you the resource block models of the recent completed block model on both the Paramount zone, which is located to the north, and then the Liard zone to the south. You can see in yellow and orange and red is the size of the chargeability anomaly. Where we've drilled, that anomaly is mineralized. We're now trying to drill the other half of that anomaly, so we think there's considerable potential to increase the grades at the Paramount. And also you can see the same scenario down in the Liard zone, where it looks like half the chargeability anomaly is mineralized, the other half hasn't even have a diamond drill hole in it. This is what it looks like in cross-section. As you can see, the results of the holes, we've outlined the grades and the copper there. We now do have the results for drill hole 410. That was 254 meters of 0.51% copper equivalent. It extended the mineralization 110 meters further to the east. As you can see, there's probably about 400 more meters to the east of that anomaly that does not have a diamond drill hole in it. So far, the correlation of mineralization to the geophysical anomaly, 1-to-1. This is the recent current mineral resource we've just completed. It was done by AMEC. Essentially, we have 1 billion tons in the measured and indicated category. You can see the grades there. It contains about 6 billion pounds of copper, 383 million pounds of molybdenum, and 5.8 million ounces of gold in the measured and indicated category. On top of that, approximately 300 million tons in the inferred category, with 1.5 billion pounds of copper, 68 million pounds of molybdenum, and 1.34 million ounces of gold. Silver is not included in this deposit, although there's a significant silver content, is because of legacy data issues. This is the end of the mine plan, what it looked like in 2008. And the reason why I show you this is that, one, the project has about 1 meter of annual precipitation a year based on long-term records. We have a 0 water balance problem. Low environmental impact, about 5% of the rock is potentially acid generating, and I believe that's considerably lower than any other project in northern British Columbia. No fish habitat in the immediate vicinity of the mine, which is fundamental from a permitting process. Minimal impact on the wildlife. We've been at wildlife studies now for 6 years, and it's a very small footprint. This area will cover about 2,000 to 3,000 acres of a project that's 50,000 acres in total extent. And that's the end of my presentation.